We have with us on the show right now Ashima Tyagi, Senior Editor at S&P Global Commodity Insights, Rakesh Arora, founder at goindiastocks.com, and we also have with us Brij, Bhushan, Agarwal, VC and MD at Shyam Metalics Energy, joining in right now on the show. All of you, thank you so much for taking the time out and joining in today. Ashima, if I could just start off with you, what is the global sentiment right now when it comes to metals? Because one wonders whether demand is going to continue to be subdued given the global recessionary fears now.
Yeah, I mean, what we're seeing right now is a very synchronized downturn in the international markets, as you can see. And from what I can see it from, I think European Union has been the epicenter of the whole roller coaster ride that we've seen. So what happened exactly in March in just 21 days is that European prices tracked by S&P Global Insights, they actually rose 52% in just 21 days in March. This was on account of panic buying and inventory accumulation. And since then, prices have been on a continuous downslide. So ever since March, prices have been sliding in Europe. And now they've reached the pre-war prices of 820 euros. So what has happened is that the buyers are stuffed with inventories. They are not looking to buy at this point. In fact, there is a news that perhaps a blast furnace in France is looking at completely idling its blast furnace because there's absolutely no demand. So mills, I think globally are just grappling with whether to continue producing at a loss or should they be really cutting production at this time.
Right. Rakesh, if I could get you in on the discussion, morning firstly. What one has seen is that the commodity stocks as well have cracked quite a fair bit. Commodity prices seem to be now showing their true color, painted by the impact of cyclicality. Just wanted to understand how long you think this underperformance in the Nifty metal stocks and the overall index is going to continue according to you.
Good morning. So, see, stocks have corrected a fair bit and now are trading, slightly below long-term averages. But bottoms are made like 1 or 2 standard deviation below. So I would say that there could be a little bit of bounce given that they are oversold. But I don't think a bottom has been fully made as yet. And so would recommend investors to stay on sidelines still. There are hardly any catalysts, which can take the stocks. Central governments and governments across the world are, hell-bent on trying to kill inflation. Commodities really stand no chance in that kind of environment.
Okay. Let me also bring on board Mr. Brij Bhushan Agarwal of Shyam Metalics Energy. Mr. Agarwal, so nice to connect with you. I haven't spoken to you in a while, but a lot has changed between our last conversation and today. Global steel prices have corrected. Things are now really looking ugly in terms of where the demand trends are moving. Where do you see global prices settling?
Yeah, presently we are in a very, very different situation. As I very stated said, it's not a very usual form. Like we are basically suffering from the high inflation globally. And apart from that, the raw material prices, because of the geopolitical situation, the carbon prices are also exorbitantly, comparatively on the higher side, generally what it should be at this price level. Because of the inflations and all, yes, there is a slowdown worldwide. The consumption of steel has gone down. Also, there is a disruption in the supply chain management. As we know, there is the shortages of so many equipment in the auto sector where the production is suffered, and so many other clauses are there. So I feel, this will continue, but I don't see a very major setback henceforth because already a lot of corrections have happened. But yes, it's very difficult to say that whether we will sustain at this level or we'll go much below this level.
Rakesh, now I'm going to take that point forward where you said that, look, steel prices, if they go 1 or 2 deviation away from the normal averages, that's the time you need to buy. What is the best way of understanding this then? What are the long-term averages for steel, HR steel, let's use that. And at what point in time you would say, given that you'll have to add back inflation also, that if steel prices go below this threshold, then I would be a buyer in the stock?
So if you look at the long range forecast for, by global analysts, most will be forecasting steel for a long time at $450 to $500. Now, energy prices are higher, so if you were to add a premium for that, probably we are looking at $600, $650 as a fair price. Now, we are not talking about fair prices here. Prices have to really go below the fair level to, bring production in line with demand. And that is where, you need to buy. Currently, there's no steel company which is making losses in India. But when the times were bad, you had SAIL, RNL, a lot of other companies were making losses. So we haven't reached to that stage as yet, where, it is extreme value. If you look at consensus forecast, they are still merrily, living in different worlds. So we have to see earnings cut. We have to see prices become so unremunerative that, some of the steel companies start making losses. And that is the point we will buy. Currently, Indian steel prices, HRC prices around 61,000 rupees. It has dropped from 74,000. But, the import parity itself would be like 52, 53,000. So we are far away even from an import parity price. Sorry, not import, but export parity price. So if Indians were to export, they would not get more than 52,000 rupees realization, whereas domestic price is around 61,000. So we are still far away from, the standard deviation calculations.
Right, and you have companies like Tata Steel, which are now looking at prices going down, can't take advantage of lower iron ore prices, since most of what they use is captive. And as a policy, they've also said they will not be buying cheaper raw materials from Russia. Ashima, my question to you is, it's not just in India, globally, metal stocks have lost their luster, right? They're down 30 to 50%. Back home in India, a similar story that's panning out with action from central banks as well as central exchequers, making sure that commodity inflation comes down or at least peaked out. So given all of this, can you tell us, where does S&P Platts stand when it comes to the Indian metal stocks, their valuations? What's the outlook?
So we are not in the space of suggesting stocks. We're essentially a price reporting agency. But what I can say is that right now, what's happening is that China post-COVID used to be a kind of an outlier, kind of surprising everyone with a very diametrically opposite view of the market. But right now, the complete sell-off in the metal space is emanating from there. In the last 10 days, HRC prices tracked by S&P Global have slipped 12% in China. Their inventories are really piling up. We are seeing a very acute slowdown in the property sector. So naturally, after 2 months of lockdown in major cities and maybe many other cities we don't even know of, consumer confidence is at all-time low. I think household incomes are also low. It'll be very hard for the Chinese economy to really prop up, even though everybody was anticipating that there is going to be a lot of pent-up demand after they open up from the lockdowns. But surprisingly, none of the patterns that we can understand from the last 2 years are replicating themselves. So right now, what I feel is Europe is down, China is extremely down. And an environment like that, India is kind of a little bit decoupled from these, but we're already seeing, again, a 22% drop in Indian domestic prices from around April 6th to yesterday, which was around 61,000. So I think it'll be very hard for countries globally to, really tame inflation and at the same time have a growth-oriented outlook. And if there is no growth, it's very unlikely that steel consumption can rise in an environment like that. But in India, they do believe, we speak to a lot of market participants, they feel that maybe around 50 to 55,000 will be a reasonable level for steel to operate at. And that would mean that a lot of demand that was disrupted earlier would return now. And there would be a lot of buying activity. India definitely looks better than the rest of Asia Pacific, including China. And we can see some sort of infrastructure spending from the government coming forward and really, picking up on the volume side. Because as somebody was mentioning earlier, from Indian mills, cutting production is really the last resort. They would like to average out their cost. However, we're already seeing a cutting of production in China because the mills in China are operating at a loss. We track their margins. They are actually operate for every ton of HRC produced, they're making a loss of $77. So now they're making a choice whether to reduce production and let raw material prices, including coking coal, iron ore, come down, or to really maybe continue producing for a while. So that's a difficult call, for any steel mill to take.
So in fact, let's go across to our panelist who has skin in the game and is, a company in that sense in this business. Mr. Agarwal, you've just heard what S&P Platts Ashima is talking about. We could see prices of steel coming down maybe to 51,000 rupees a ton. And India still stands out from the rest of Asia because of government spending. So then the question to ask you is that the price drop that we've seen for steel because of the export duty action as well as the lower demand, how long can this continue? Is this a temporary blip?
See, I think there is a slowdown. As such, there is no threat because, one more good thing is happening, like worldwide, globally, everybody is talking of reconstruction, creating a self-reliance country and all. So this is not going to be a very long phase. But yes, the prices will come down. There will be also correction happening rapidly in the raw material prices. So maybe, for one quarter or maybe, the industry EBITDA might suffer, but in the time to come, the sustainability on the margins, on the raw material side to the finish and all should go better.
So last time you indicated that a 4 to 5% correction was around the corner. Since you deal in a lot of categories, do you see that apart from HR also there could be pricing pressure in other categories?
See, approximately today I would say on an average around that time when I spoke to you, I said that there's the correction of around 4 to 5%. But now with the present price situations and all in the finished market, I would say there is a difference of around 12% to 14%. The price has already corrected. And simultaneously, the raw material prices have also gone down. So if you see with the present prices of the raw material vis-a the steel prices, I would say the average difference is still remain around 4 to 5% on the present prices of raw material vis-a the finished steel. But yes, on the outlook of the finished steel prices, yes, the prices have gone down around 12% on an average, I can.
Rakesh, the ultimate objective of the export duty was to bring domestic prices down. Now coal prices have also come down is what we understand. Domestic prices have also come down. So Rakesh, do you think somewhere it's a matter of maybe a quarter or so and the export duty rollback could come back and that could be the turning point again for steel companies?
See, anything can happen. Meaning we've seen all the steel big boys going and making a plea to the finance minister. So probably they're asking for some relief out there, and maybe some relief can come in, but it's too early. Meaning, first we have to see inflation in India go down to that 4% level, which RBI is trying to reach. So probably then, export duties can come off. I think it's too premature. Unlike, 2008 or so when, it happened in 3 months. I don't think this time, same will happen. Number two, international prices have already fallen by more than $100. So half, meaning the benchmark which we thought earlier is actually now lower by $100 already because of international prices falling. So I don't think, we recover back or export duty goes back in a hurry. We'll have to live with it for a few more months.
Ashima, Rakesh, Shyam, thank you so much all of you for taking the time out and speaking with us today and giving us this 360-degree perspective really on what's going on with metal.